The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 29th of August, almost wrapping it up tomorrow at 4 o'clock. The month gets closed. Where will the month end? Will the weekly charts start to give sell signal to sell mode signs? One or two have already. Others are lagging. You got some terrific action in the queues. Thank you, Steve, for 2 great hours. And we're going to have a Thursday edition. I'm going to be here for 2 hours. I'm doing my show, the opening call. Oops, that's my newsletter, the opening call. Very comprehensive newsletter. Gives the parameters look for every day. Gives the Dow parameters to the point where you can actually use it. If you're trading, I get emails from folks all the time. If you're trading intraday and you're looking for the different levels and you want to learn how to use the volatility index or the short-term trading index, Richard Arm's index, or the different parameters and the wave count, the Chapman wave count, my newsletter just covers a tremendous amount of that. So it just becomes it isn't a GPS, but it is a map that guides you through. It's like it's just, what is it? So when you go around and you have to find your way from one point to the other, and they're out there. There's one in Rhode Island where there's a topiary with topiary. Oh, what are those things? Someone in the den's going to help me out here. You know, just, the wood is right there. I hate when that happens. There's a hedge or a fence and you have to walk along and find different paths, go from point A to point B. Oh, you know exactly what I mean. A maze. Thank you, Lorne. I just knew I'd get someone to help me out there. Yeah. So this is the idea that you can, that if you go along the wrong path, you will know very quickly, and you can go right back to the correct path. Those are the levels. Now, as far as the GPS is concerned, the GPS is for the directional move, and that's the tide, the greater tide. Oh, that reminds me right now, I've got a chart up right from my CD introducing the Chapman wave methodology. I love this because this is what was forefront on my mind today when I did my newsletter. I said, yesterday morning I wanted to go long, 300% long the Dow. That would be against everything that we've got to the short side. What was the reasoning? The reasoning was that if there was even just a momentary let-up in the rhetoric, the usual political rhetoric about going in to Syria, this market looked like a little coiled spring on a very near-term basis, ready to bounce. The reason why I didn't do that, it would have been a nice trade. We had another one like it, a counter trend trade just recently, had nice profit in the 300% long. But the reason why I didn't do it is because in my mind, the mindset that I have right now says that in all the work that I'm doing on my longer term charts, this is going towards intermediate, not monthly yet, but the longer term charts going, not short term, which normally for me is a swing trade between 3 and 5 days based on the 120-minute chart. This is more intermediate term. I'm now talking weeklies. Well, in that particular instance of the weeklies, what I'm looking at is a sense of, how can I put it? It's a sense of understanding the tide. If any of you have ever surfed, you know that the waves are one thing and the tide is another. Sometimes there's riptide. It doesn't matter what those waves are like. A riptide for me, the way I swim, I will not go in. Just risking life and limb. But in this particular instance, at this particular point, we've got a bounce that's coming. Adamant in the den says, Basil, we're going to bounce up through Tuesday. There's a real good chance that there will be an upward move towards Tuesday. Now, I'll talk about those other things, but look at this chart that I'm showing you. If you're looking at Tiger TV, I love this. It just when I designed this and I said, wow, that sums up, identify the trend and then trade with the trend. Now, why do I say that? If you're at the ocean and you're at the beach and you throw out a piece of driftwood and the tide is coming in, how far out will the driftwood go? It won't go all that far. Why? Because the waves and the tide are just pushing it towards the towards the beach all the time. If the tide is going out and you throw a piece of driftwood, how close will it come to the shore? Well, it'll keep being pushed out. And that's the reason why I think it's important to be trading the trend. Now, you've got to know your time frames, because on a very short-term basis, the downside to me was done. I had all these measurements that said that the E-minis had achieved a goal. And look at this chart. It says it all. You could have traded this on a very short-term basis on each peak in the Chapman wave going to the upside. It doesn't matter what the chart is. Just look at the price movement. But that trend, if you look at it with a down arrow, it even looks wrong. It doesn't look right, because nature says when things are going up, you want to be looking up. When things are going down, you want to be looking down. So this is the wrong trend for shorting, unless you're a very short-term trader. And this is the wrong trend for buying, unless you're a short-term trader. And it doesn't matter if this is a 5-minute chart and we're looking at a 1-minute trader, that's fine. But if it's a 5-minute chart and you're looking at and you're a longer-term trader, you want to be trading with the trend. So in this case, this is a weekly chart, and the weekly chart said it was going down. To trade against the trend to trade with the trend, and now look at this chart. To trade with the trend allows you to take the waves to the downside while anticipating that there will be higher highs and most of the time higher lows. That's the trend. Now, how can you help yourself? Well, in the CD introducing the Chapman wave methodology in the different webinars that I've given, they're all available at TFNN. The most important thing I always emphasize that if you're looking, you can use just the naked chart, nothing else. But you could also use other indicators. And if you use the MACD from that crossover on this particular chart, right there, where that up arrow is, you will see that the fast-moving average held all the way through, even in that congestion period, and then it broke out and then finally turned around at that particular peak F and G. That's called the smooth peak G in the Chapman wave methodology. And then on the way down, it was a repellent line. It could not, the fast-moving average, that little thin gray line, couldn't get above the black line. That's the trend. Okay, enough of that. I just want to talk about it only because I think it's so important to point out we were anticipating, we could have done that, we could have taken profits. I am attempting. This is what we did when we bought the Dow Diamonds on the very day of the low back in 2009, March the 6th. March the 9th was the low on the S&P, and the S&P up in the Qs. But the 6th, the Friday, was the low in the Dow. We got that exact low. And I kept saying, I don't know if this is going to work, because there should be an U-shaped arch formation that retests the lows. But as long as we can learn to go from time frame to time frame, that's going to be very important. What do I mean by that? Time frame to time frame. Look at this. This is the Dow daily on the left here. It made a peak D top using a particular technique. It wasn't exactly a D, it was a C, but I used a phantom peak, so that gave us a peak D right at the top on the 5th of August. We've been short the S&P since the 3rd of August, almost at the exact top. I didn't want to give up that entry point to the downside for two reasons. One is I would rather trade counter trend for short-term traders in my opening call to get the benefit of that kind of a move. And I would also rather have that entry point be the crux of the whole thing. Take that out. I am wrong. Well, I will not allow it all to go all the way up to not make a profit on this particular trade. But you take that out and you make new highs. This is all over. We're going higher. But if you start to make rally failures, which I believe this is just another one of those leg A, maybe it goes to a leg B and then fails, then that's the issue. On Friday at 4 o'clock, we will know whether I'm getting a sell signal to almost an immediate sell mode connotation right here in the weekly chart of the E-minis. Now look at this. Talking about time frames, you see, here's a 15-minute chart. And that 15-minute chart has made a cup formation. Remember, I'd spoken about this recently, and I said that to the downside, quite a bit to the downside, when I had a call from Art in New Hampshire. Now look at this. We've suddenly got, in the 15-minute chart, actually, this goes all the way back. I'm sorry, I should have shown you where it was. I hope it's still here. There, all the way back, that cup formation, that's exactly what I was saying. We should come down. We were at 1665, 1664 on the E-minis. Came down a little bit, came right down to the most recent low of 1625, was it 1624.75. Now we're having a rally, and that rally has retested with a successful high at about 1627.75 early this morning, and now this is leg A, peak A in the 15-minute chart. Does that say it can go to B and C and D? Absolutely it says. But one step at a time. This has the potential for that pattern I call the single leg A up. How will it fail? So far it hasn't failed. It will fail if the E-mini is at 1642.50 suddenly over the period of today, the rest of the day, instead of closing at the highs, suddenly sees like yesterday another failure pattern. If it goes underneath 1636, 6 points lower, that'll be considered a potential single leg A up failure pattern. Now we've got something else that's even more important. The 120-minute chart. I said this morning to subscribers, I always show the 120-minute chart. At that particular point, it was somewhere around there. And I said, no, it was somewhere around here. And I said, there's a chance that the stochastic and MACD are rallying. It's like a spring being loaded. It'll unfold quickly to the upside the moment that 1639 level is broken, and that makes the 1641 area to 43 area the next resistance. So I just wanted to go through that because I thought it was quite important just to talk about trends and give reasons in my opening call. We bought gold, a gold ETF. We actually bought it within fractions of the low, got stopped out. I can't remember if either it was a tiny profit or a tiny loss, and then got right back in. So it's almost at the low. We've got the equivalent of the GLD. It's doing really nicely. Is it in leg E, or let's go to the GLD, right? Actually, just do the numbers. The Dow's up 72 at 14,896. The S&P's up 9 at 1644. Nice discrepancy there with 500 stocks on a bigger percentage basis, stronger than the Dow. Comp index is up 36 at 36.29. Gold is down 12. I'm going to talk about that right now. I'll do it now. I'm liable to, so I'll talk about it later, and I won't. So let's go first to the GLD. The GLD, I'm calling this peak C. It could be, in fact, a peak F. But the MACD is very strong. Stochastic's at 93%. You had a C1, C2, and then a peak D in the 120-minute chart. That allows for a pullback. We actually have the same thing. I'll talk about that in a moment. I'd spoken about it with John from Philly yesterday in the NDX, the 100. And the futures. So I'm calling this peak C with a good chance it's going to go to a D. And the closer it gets to that 130, I said if it hits 136, my target on this particular move is going to be 138.40s, which is the 200-period exponential moving average for the GLD. And then we'll decide what we're going to do with the position. Hold the position, take profits. I don't know, take off some. I don't know what we'll do. But in the meantime, it's looking real good. So that's the GLD and let me finish the numbers. Silver is down 56 cents. The dollar is up 64.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Editions Hour, and we're looking at the Dow for 83, S&P is up 11. It sounds like a lot, but just let me put it in context here. Look at the S&P, where it's come from, and look what's happening today. Big deal. 1650 is the 9-period exponential moving average. It's at 1645. Oh, it's a big move if you manage to get the exact bottom. Yesterday at 1627, certainly 23 points, 22 points. That's a lot of dough in the E-minis if you're there. But I'm just trying to put into context. Now there is a divergence between the S&P, the low that was made, and the rising stochastic. The MACD's trying to turn around. It's going to take a lot of time for that to turn around. No, I see this as a counter-trend rally. I still have a target around about 1609 to 1596 in the S&P before we can really make some big decisions about the up channel in the weekly chart. Let's see what happens. I'm always flexible about these things. You heard this just a moment ago. You heard the talk about this fabulous program that's being hosted by TFNN. You've got a week from today to sign up, Thursday, September the 5th at noon, for the virtual trading competition. That is just $10,000 being given away. The increments like $300, $1,000. It's fantastic. So you think about it, or it's a learning experience. You're going to be using the Nadex platform. You're going to be able to use they call it funny money. Basically, think of it as a demo account. A demo account is exactly what you would be using if you did the real thing. The only difference is this is money that was put into the account that you're able to use. It ain't your real money, but it's a fantastic way to be able to monitor your progress. And the beautiful thing, listen to Daryl Martin's program at straight after Larry's. I'll be doing Larry's show today, the Futures Hour. But straight after that, you get Daryl Martin. Listen to him. How he beautifully uses the techniques of using the Nadex platform, but with what he's developed is just fabulous. So that you can choose the right instrument for the right time frame, but you can limit your risk to the exact amount. It's a little bit like an option. The beauty of this is that it runs around the clock in hours, and you can use the particular periods, day, evening. It just midnight you can start to trade. It's fabulous. I've been looking into it since it was introduced. I just haven't had. There are other things that I have to do right now, but I'll be getting more into it. I gave a call the other day on the E-minis that would be a perfect example of how to use the Chapman wave methodology within this context. Okay, let's go back to the GDX. So now what we're looking at here in the GLD, which is the Spider Gold Trust. I've got this as a peak. See, it could turn out to be an F, but at 93%, there's a real good chance you're going to pop up one more time. It's leg B in the weekly. Now, I love leg B in weeklies, but I don't like leg B in the weeklies when they've come down huge. I've got a big arch formation. I'm going to be monitoring this really closely to see whether or not the monthly chart and the weekly chart are all suggesting, yes, it could give a full peak A to B to the requisite C and D in the Chapman wave methodology. I don't know yet. We're long. I don't really care. We've got a nice cushion because we got in almost at the lows. I'm just going to treat it one by one. There are certain gold stocks that are acting really well, and certain stocks in the silver that are pulling back very sharply. They're independent in a sense at this particular point. The winners are really fantastic, and some of them are struggling. Some of them had great upside and now have given back about 30% or more. So we'll be watching that. Now, the question I had in the den was, could I look at the GDX? I'm going to look at the GDX. I'm going to do much more of this in Larry's show. I believe that this could be called the peak F in the daily. This is the market vectors gold minus ETF. So this is the stocks. Because it's the stocks, it can have a different pattern to the gold contract itself. That's number one. Number two is, this is already in leg C in the weekly chart. Do you understand what I'm doing here? I'm trying to say to you, separate stocks from the core, which is the gold and the silver contracts themselves. Separate each index because they are the GDXJ and the GDX. Look, the GDXJ. I have this as a C. It should be a G actually. Somehow or other, it looks to me like there's still strength in this. The GDXJ looks a little stronger than the GDX. It's the juniors. So keep that in mind. And now, just the final thing. I wanted to mention, I'm going to do this now because I'm liable to forget. This candle that's forming this month, closing out tomorrow in the monthly chart of the GDX, is really important. When I say really important, I mean really important. And I'll explain something about it soon. Or maybe I'll do it in Larry's show. I'll be right back. Dow's up 89, S&P's up 11.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Okay, so let's just take a look back at the GDX for a moment, and let me just explain what I'm looking at. This long-legged candle, this is my own interpretation. This is not Steve Nisson's, who's the person who introduced Japanese candlestick charting to the United States. This is my own interpretation. If there is a narrow close on the GDX wick Friday tomorrow, narrower than it is right now, it's trading at 28.10. If it trades at about 27.30, that's Friday at the close, or lower, that wick is going to become a magnet. It means it doesn't matter how high it goes in the next month, it's going to come back and at some point test right there in the middle, around about the 27.50s. And then it could continue the way up, or it could go down and then come back again. What this is saying, this particular candle, is don't be surprised if you see trading that essentially turns it into something like a rectangle or an H that goes to an M pattern. So it can go, it's at 28.11, it can go to the 32.99 200 period, 9-period exponential moving average, or a little higher, but my suspicion, I'm going to draw it in now, that over a period of time, we're really looking at the H pattern there in the monthly chart. So I can't say that I'm a major bull on gold. That's got nothing to do with the shorter term, and most importantly, it has nothing to do with each individual gold ETF or ETN or the gold contract and the silver contract has to be assessed individually, because although they will follow the trend, they won't go in the same percentages to the upside or the downside. We've seen that before. Okay, now let's do a couple of other things, and I'll spend much more time in the next session. I want to do a couple of things right now. I want to just quickly talk about the volatility index. That VIX index has pulled back today, but it's down 33 cents. It is still within the candle of the gap up of the 27th, with a low of 1582 and a high of 1713. Those are the two levels to monitor. A close today below 1582 says be careful. 1544 will be the downside major support. Between that and 1503, if the volatility index is going to fall before it gets to leg D, and at the same time it allows the market to go up towards those 9-period moving average trend lines that we've been talking about, moving averages that I treat as trend lines as well. So let's go to our first caller. We've got Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Salesforce.com reports after the close today.
Oh, they do.
Yeah,
you know,
I don't know which.
Benoit, what's his name? Benoit, what's his name again? Benoit, Ben something. Whatever his name is. This is an absolute master of verbiage. And certainly this company is an amazing company. They do some fantastic things. This is the guy that also actually produces the goods. There are some of these CEOs that come on and they just yakety yak, but they actually don't produce the goods. I think in his case he has. However, since there was that rogue wave to the upside to a PG at 47.58, folks, we're looking at Salesforce.com, Cloud Enterprise. It is trading at 43, up 22 cents. The high was 46.10. That isn't the price. The price is... Did it take, what was it a 10 or a 5-for-1 split? I should know because I've got the notation. Oh, there it is. The notation, I can tell you right now. At some point, back in October of 2006, we've got it down here at $10.56, but it was trading up at 50. I think it was a 5-for-1 split. So this is 200. This is a $200 and something stock that was split, and it's gone right back almost to the levels that it was. I love when major when powerful companies split very often, 6 months, 8 months, or maybe a year. Sometimes it's as little as 6 months later, they have doubled. They are back at the price. You look at the price and you say, oh, it's pulled back 8 points. You say, no, wait a minute. Or pull back 3 points. You say, no, wait a minute. That's the split. It's almost back to where it was. This is that kind of a company. Now, the latest move, I'm a little concerned. This almost looks like a biotech stock to me. This is a derogatory term, in that the way those arch formations occur, especially the latest ones that went to that, it failed at a peak F at 40.87 the week of the 8th of March, pulls back, makes a cup formation, goes slightly higher to 47.58 on the week of the 24th of May. Then it takes out the low in a left side, right side price time match. A perfect rogue wave. What is a rogue wave? It's where a downtrend has started. If you were short, you're actually correct. When suddenly there was some news event or an earnings announcement and it spikes usually it's to an all-time high, just barely takes out the all-time high, holds there long enough for the shorts to say, oh, not again. I am out. I'm never touching the stock again. For the people who have been wanting to buy, have never bought, to say, oh, no, I've missed it every time, and now it's at a new high. I've got to get in. And the bar that does that, as you can see right here, the bar that was in May the 24th of this year, is the bar that closes at the low and goes straight down. Now, I have a rule of thumb in Master Trader Series. I talk about the number of bars that are often left after a rogue wave and what it means with the rogue wave. And in this case, it plunges from 47.58 to 36.09. just a couple of weeks later, on the 21st of June, runs up and now has failed to make a new high. And there's a doji candle that I call a gray peak A. Now the big question is, earnings are coming out. This is a habit of doing opposite of what you think. In all the times that I've been watching it, sometimes it looks like it's all over, and they announce and it spikes up. There was, I don't know what that spike was. No, that would have been too soon for earnings announcement back on the 11th of June. Do you remember when the last earnings was? Must have been 3 months ago. Must have been June. Wait, what are we in? We're in August, so it must have been in May. All right, well, whatever it is, in May there was a spike up to a peak E in the daily, and then it came down in a cup formation and came back down. Wow. The question you're about to ask me, I'm anticipating, is this a short? Is this a buy? Wow. What's your question?
Oh, given your reaction, maybe sometimes it's just better to let them report earnings.
You're correct.
And then get another data point and see if we make a leg E in the monthly. Or if we don't, there's still that would tell us something, and then we would just have another card turned over.
Exactly right, and that to me gets to the nut of what happens on earnings report. Now I once had a subscriber who had done unbelievably well in the period going into the high of 2000. I'm talking hundreds of thousands of dollars he had made. Hundreds and hundreds. Comes 4 years later, he's down to 120,000, and then he was down to 80,000. But he had a knack of identifying certain characteristics at earnings announcement that he could play, and he didn't use options. He wasn't that familiar with options, but what he did was he went short or he went long. Thank goodness he was able to do that because it kept him in the game. I have found over the years that I have all the technique, but I don't have the technique of interpreting how the market is going to respond. In other words, this is a leg D to the downside. The stochastic has a 13% is ready for a bounce. The MACD needs a lot of work, but it could bounce. It's a nice candle today. Not good enough. I would prefer it to be at 43.35, so it's engulfing the previous candle of yesterday and the day before. But the monthly and the weekly charts are saying to me, hey, if you call me up and said, I don't know about earnings are coming out in 2 months' time, what do I think of the stock? I would say this stock is going down, and that within a month or two, I can see it testing the 39s. Doesn't sound like much, but 10% in a stock like this to the downside happens a lot less than the 10% to the upside. So now I'm going to make the suggestion. Let's wait for that data point. Everything about it says there could be an overnight pop, and by Tuesday afternoon to Wednesday morning of next week, it could be giving back that. There's a little gap. I don't know if it's a gap at on the 14th of August at 14.19, the low, and the next day is 14.18. Oh, a full 1 penny gap, but it's a gap nevertheless. So I'm going to be watching this real closely. Why? Because I think that there are some sectors that are looking very tired. And although this is trading closer to its all-time highs at 43, just 3 points off, 9%, 8% off its all-time high, something about the stock says it needs to take more time to digest the huge gains that it's made over the last couple of years. That's my thinking. Am I prepared to go long the stock? I would consider going long the stock if it does pop tomorrow. When's the earnings tomorrow, you say?
Yeah, after the close today.
Oh, that's after the close tonight.
Yeah.
Okay. I would be prepared to consider a long if I felt that I was looking at enough evidence in the general stock market to see a rally from here, starting yesterday, going into not next Tuesday or Wednesday, but going into Friday or Monday of the following week. That is a longer bounce, more like a swing trade bounce, then I say, you know what, I'd have it as a short-term trade, and I just put a tight stop on a small position, and if it takes out 46.03, I think that is 46.13, I'll stay in the position. But to tell you the truth, I think you nailed it exactly right. Let's wait for the next piece of evidence, and I will keep my bias to myself for now, because if it does start trading in the 45s and holds there into Tuesday, that has to be considered good action. 41.27 is the 200-period exponential moving average in the daily. It takes that out and closes under that for 2 out of 3 days without filling the gap. I'm saying that this is on its way back to the 39.38 area. So let's hold off. Remind me, I'm going to make a note of it, and I'll be watching it after the bell tonight. And let's see, and I'll talk about it tomorrow again. Hey, thanks for calling, and thanks for bringing it to my attention. Thank you, Mike. Have a great day. So now let's go back here. Salesforce earnings released 4 p.m. today. Good. And, it's how does the market interpret the news? It could come out with a fantastic earnings, and then the guy's always optimistic. But it could be the other way around. He's very optimistic, but in fact, the top line, the bottom line, one of the lines is just not right. So let's see how the market interprets it. Let's give it the entire morning, tomorrow up until about 10:20, see what happens, how it acts overnight, how it actually acts in real time when the market opens tomorrow. That's Salesforce.com. Now, here's another thing. In my morning call this morning, I blipped out for number 15 in my bullet points. They can go up to 16, 17, 18 even every day. But you don't have to be looking at all that. You need the Traders Corner. The first paragraph gives a summation of what we're looking at, where I discussed that I wanted to go 300% long. The Dow, I just didn't want to spoil my vision right now is focused on the negative side. I will change that as soon as I see indications that I should. And I don't want to mess with that right now. I could have. I just didn't think it was worth it. Now, here's the other thing. And we have a stock that's up over 90%. We have another stock. Let me just have a check right now. Acting okay. Nice percentage, but it's a very low price stock, but it's on the plus side. That's good. Gold ETF is doing well. And the short so far is still doing okay. So I'm just going to stay with that scenario. Look, as far as I'm concerned, when I'm looking at this, I was going to put on we did have a short today which got taken out. We had it yesterday, got taken out for a 0.5% loss, and today I think it'll be maybe a 1.5%. I'm not sure. I haven't checked it out. But the reason why I did that, it's in an area that I think is vulnerable. That's number one. Number two, the stock that I wanted to choose today was GMCR. I wanted to go long for leg D in the Chapman wave. I wanted to go long at the opening. I probably would have missed it because it closed yesterday at 89.34, and today it closed yesterday at 83.40. Today's low was 86.67. No, let me do this again. It closed yesterday at 86.66, and today's low was 86.67. I would have missed it. I would have not played a gap to the upside. I would have said, let's get any little bit of a pullback, market weakness. I would have wanted to buy it. Why? I wanted to see the strongest stock that mutual fund managers are, one of the strongest stocks that mutual fund managers are going in. I wanted a quick trade, just a couple of percentage points to the upside. So it would have been about a 3% gain. And then I pulled it. I said, you know what? It'll make leg D. I need to sit this out. I want very much to be in a position that I'm comfortable with, and let's see how that plays out. I'll be right back, and don't forget, I'm covering the Futures Hour coming up.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, had a number of questions. I'm going to write them down, and I'll be doing Larry's Futures Hour coming up. Let me just do this because I think it's important to do it right now. First of all, the question I had, was it peak E in the QQQ series? Yes, it was a peak E at 77.28 on the 26th of August. We are making 2 cup patterns right here. They invariably turn out to be like the lowercase m. This is a soft W pattern. They invariably fail. So I'm suspecting that the Qs can, in fact, there's a chance that they can make one nominal new high just a tad above 77.28. That'll be an F. But more importantly, it could fail any point from here. But in the meantime, price is the arbiter of trend. The trend says that it's a high-level consolidation. It's filling in the gap that from the 26th with a low of 76.55. If it is 76.57 or higher, it's going to retest. A good chance it's going to retest in that low 77s. That to me is going to be critical. And the weekly chart says that if it doesn't do it tomorrow, it could do it in one quick pop on Tuesday when we're back from the holiday. I hope everyone has a great holiday. Depressing because it's end of summer for us around here. Oh, well, we keep going into September. But the technicals of the weekly chart of the Qs are still positive. and you've got a potential doji candle coming up tomorrow at 4 o'clock in the monthly Qs. If it goes 1 penny higher than 77.28 next week, it extends leg E in the weekly chart. Oh, it could turn around from that moment on and just smash. It still means that it's leg E until it makes a peak, okay? So that's for those who use the Chapman wave methodology. Now the SPY. Good question in the dead. Could I just give an overview? Jimmy asked. So, yeah, Jimmy, look. This rally that we've got right now, I've actually got it. Let me just do this now. Maybe I'll be able to talk about it a little bit more in the next hour. Let me just grab this chart here. I want to do a big picture of it right this moment. Ooh, I hope I've still got it. Where did it disappear to? Uh-oh. Monthly, I bet that's it. No, that's not it. Oh, I'll do it in the next hour. It's the monthly chart of the S&P. All right, I'll grab it here. Monthly chart of the S&P. We'll grab it right there. No, that's the SPY. Oh, boy, I'm trying to do everything at once, and I can't do it. Let me see if I can get it from here. SPX monthly, this better be it. There it is. See this chart right here? Gone to a leg D. 1698 was the recent high. Then it went to 1709. That monthly chart in the inside track, the thing that I've been teaching for so long here at TFNN, so more people are beginning to use it. That inside track right there, that red line, that's key. And every other peak C to D has been very quick. And when it's done that, you've had somewhat of a pullback. So that's what I'm watching. So here we go. Let's go to the answer to the question. What do I talk about in the SPY? I think that the gap with the low of 165.89 from the 26, that area, this whole area here is going to be really critical next week. If for any reason the SPY breaks above 167.30, it says a larger arch formation is being formed. If for any reason tomorrow the S&P closes somewhere around the 163, below where it is right now, 164.95, but I would say if it closes anywhere in the 163s or lower, then there's a real good chance my weekly chart has a peak F in place. I'll be putting in a little upside down carrot. That's going to suggest you've got a sell signal that has gone to a sell mode because the stochastic's under 80% and the MACD is negative. This rally is a rally that is going up without the technicals of the weekly and not even the technicals of the daily. It is the monthly that's holding it up, and that's in leg D. I'll talk a little bit more about it in Larry's show. The commodities hour I'll be doing next. And Larry, I'm sure we'll be back next week. I'm just going to fill in this afternoon for him. So stay tuned. Don't forget, my service is the opening call. You'll find it at the front page of TFNN. 2 weeks free. Check it out. I think you'll find it really useful, especially if you're a longer-term potential holder.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.